Hello and welcome to our channel Vitt Sikhya. Today we're going to explore the world of initial public offerings or IPO in India. It's an interesting process where private companies offer their shares to the public for the first time, becoming publicly traded companies. It's a big step because it allows them to raise capital from investors and provides an opportunity for individuals like you and me to invest in their growth. So let's take a closer look at the IPO process in India. Okay, so let's break it down. The IPO process in India typically involves several key steps. Let's go through them one by one. First things first, the private company interested in going public needs to make some preparations. They have to meet various regulatory and legal requirements and choose the right investment banks, lawyers, and auditors to assist them. They also review their financials, business model, and future prospects to get everything in order. Next up, they bring in some experts to help them out. The company appoints intermediaries like merchant bankers, underwriters, and registrars. These professionals play a crucial role in determining the issue price of the shares and marketing the IPO to potential investors. They provide guidance and support throughout the process. Now it's time to create an important document called the prospectus or the draft red herring prospectus. The company, with the help of its intermediaries, prepares this document that contains all the necessary information about the company, such as its business details, financials, and risk factors. It's like a guidebook for potential investors. This prospectus is then submitted to the Securities and Exchange Board of India or Sebi for approval. Sebi, the regulatory authority for securities markets in India, reviews the prospectus to ensure that all the required disclosures are made and investor protection measures are in place. Once Sebi gives its approval to the company, they can proceed with the IPO. They want to make sure everything is in order before moving forward. Now comes the part where they determine the price of the shares. The company, together with the merchant bankers, takes into account factors like financial performance, market conditions, and investor sentiment to come up with the issue price. They want to strike a balance between attracting investors and ensuring fairness. Time to spread the word. The company and its merchant bankers conduct investor roadshows and marketing campaigns. They want to create awareness and generate interest among the potential investors. These roadshows are held in various cities, both in India and sometimes even abroad. They want to get people excited about the IPO. And now the moment arrives. The IPO is officially open for subscription by the public. Interested investors can apply for shares through online platforms or physical application forms. It's like opening the doors and inviting everyone to participate. Once the subscription period ends, the company, along with its intermediaries, goes through all the applications and determines how many shares each investor will receive. They consider various factors like bid price and investor categories to ensure a fair allotment of shares. Finally, the company's shares are listed on major stock exchanges like the NSE and BSE. This allows investors to buy and sell those shares freely. It's like opening a marketplace where people can trade and invest in the company's shares. Now, to give you an example, let's talk about the IPO of Indian Railway Finance Corporation or IRFC. IRFC is a dedicated market borrowing arm of the Indian Railways, responsible for financing its various infrastructure projects and operations. When IRFC decided to go public, they followed a similar IPO procedure. They appointed intermediaries, prepared the red herring prospectus, obtained Sebi approval, determined the issue price, conducted investor roadshows, opened the IPO for subscription, allotted shares, and finally got listed on the NSE and BSE. This allowed investors to participate in the growth of IRFC and trade its shares. So that's the IPO process in India. It is an interesting journey for companies and investors alike. If you found this information helpful, don't forget to like, share, and subscribe to our channel with Sikhya. Thank you for tuning in and have a great day.